Hey everyone, got a very exciting show for you. I'm actually bringing back a returning guest. This is his third time on the show, and I really like these interviews because, frankly, I turn it over to him and he just asks me hard questions. Uh, that hopefully you know by now on the One Rental at a Time channel, I enjoy giving back. But one of the things I like doing is answering hard questions because, frankly, I think most of the time my thoughts or opinions are different than the prevailing thoughts, and I just like to know where I stand in the mass of YouTube entertainers. So Brian, welcome back to the show, man. How you doing?
Sweet. Thank you, man. I'm doing very, very well. I like asking these questions. I like to watch the news a lot. And, sometimes I'm like, man, I really wonder what Michael Zuber thinks about this.
All right, man. Well, I'm gonna turn this over to you. I have no idea what's coming, so let's see what happens.
Okay, cool. So the first question I have, I know you've sort of talked about it a little bit, but I wonder maybe if you could dive into a little bit deeper. I've been seeing a lot this idea of there seems to be, something kind of sneaky about being a landlord. You're sort of profiting off of, a basic human good like housing,
Yeah.
Um, so, I mean, what would you say to people that think there's something sneaky about being a landlord? And, perhaps maybe I know you understand it as a service, right?
Uh-huh. Yeah.
Being a landlord is essentially a service. And I don't know, what's the alternative? Like, I mean, would you,
Yeah.
I,
So really what you're pointing at when you're calling sneaky, I think I will call greedy. I think there's an opinion by a small set of folks. And when I say small, I don't know, it's 15, 20% of the folks out there. They just think all landlords are greedy. And frankly, some landlords are greedy. There are some people, and I've called them out on my channel, I call them slumlords, that cut every corner, that take advantage of every person. They are, for the most part, horrible people. But that, in my opinion, is not most landlords.
hmm.
I believe most landlords bend over backwards. I believe most mom and pop landlords make very little money. I believe most mom and pop landlords will lose money this year. And so
Hmm.
first, let's just break it out. Let's call it what it is. It's greed. There's a general feeling by a small percentage of the population because their experience says their landlord is greedy. Their landlord provides a horrible and unsafe living quarters, and they cut every corner, and every landlord's like that. So the first thing I would tell you is that's not the case. Um, I, as a landlord, could very simply say, because I have proof and experience, that some tenants are horrible, thieving, bad people. But, my experience says 95 to 98% of the people are just wonderful human beings, want a great place to live. So if you are going to take the 1% or 5% or 10% of landlords and then brand us all horrible and greedy individuals, that's unfair. It's wildly unfair. I would tell you most landlords lose money. Certainly the numbers point that if you blend all averages on a good year, landlords make about 9 cents on the dollar, right? There's not a lot of profit there. Most landlords really make their money by simply owning the property forever. That's really where most landlords make money. Most landlords don't make enough income, which means net profit, to live off of. It's not that kind of business. It's a side hustle for them. It's, hey, I'm gonna have. There's a house I had that I instead of selling, I rented out and I own that for 30 years. And yeah, when I'm 65, I have the debt's paid off, and I could sell it and put a couple hundred grand in my pocket. But let's remember, most of that wealth is created over time.
Hmm.
Being a landlord, like people think, is not a get rich quick business. It is. There's nothing sneaky about it. And then I would ask you, for the folks that really want to have this discussion, we have about 11 million houses in our country that are provided by mom and pop landlords. So let's assume that you called them all greedy and you got them all washed out. What would happen? What would happen? Well, the big deep pockets, the one that you and I really think are evil in Wall Street, would pick them up, right? They have deep pockets. They would own. You think Wall Street's going to treat you, the tenant, any better? I certainly don't think so. The other thing you could think about is, okay, what this is the one that really gets me. If we don't provide rental units, right? If renting is against the law, What does that mean? That means either you own your house or you live in a car. Those are the two options. There are some people, given financial situations, that don't have the down payment or the credit to own. So if there's not rental units, folks, your option's a car. I mean, I just don't get that logic, but that's some people. I see the comments all the time on my channel. You're a greedy son of a bitch. I hope your tenants never pay. You're evil. You're the devil. Go to hell. I mean, I see those. I delete them, but I see them. And again, that's just bad logic. If the option is own your home and no rentals, that means you're either going to own your home or live in a car. And I propose that that's probably not the best option for most people.
Mm-hmm. Yeah, good points. Good points for sure. The next question I have is this idea of gentrification, right? So basically having, to my understanding, basically having a neighborhood go up in value because the neighborhood essentially decides to renovate, or the owners of the houses in the community decide to renovate, therefore causing rents to go up, which would be a bad thing for the people renting, right? No one wants their rents to go up. What's your take on gentrification? It seems to be kind of this evil word that people are using nowadays, but it seems to be bad for renters but good for people that own. What's your take on that, and am I right in that assessment?
Yeah, I think you're, I mean, in general, I think you're right. I think in general, basically what gentrification is for me is, you think about it's happening in my market, Fresno, California, right? There was a part of town called the Lowell District, or maybe probably a better example is the Tower District, right? The Tower District is this cute little part of town. Every house is different. You can go anywhere from a little 500 square foot, 1-bedroom house to a, 2,200, 2,200 square foot Craftsman, right? They're all unique and different. There was no single builder back when these were all done. And there was a time right after the crash that became really, the spot where, it went from like 60-40 rent, owner renter, to like 80-20, right? It really went renters, just because prices went up, people lost property. And when it went that far right, or meaning more renters than owners, let's just be real, right? Renters don't take as much care of property as owners do, right? I can typically drive down a street and call out a renter versus an owner simply by looking at the grass. I mean, it is really that simple. Why is that? Well, renters don't water the grass because that's a water bill. Owners do water the grass typically because they want their house to look good, right? It is often that simple. And what has happened in the Tower District over the last 2 or 3 years is people have started coming in and paying above asking prices for fixers, because what has happened now is owner occupants has become interesting, and this has become the spot in town. So the Tower has gone through a tremendous gentrification, and there are a lot less renters in the Tower District, right? Where it was 80%, it's probably now 40%, because owners have said, I want to live there. And when you're an owner, you can pay more than an investor. So yes, there have been plenty of houses in the Tower District sold to new owners. They have gentrified the area, cleaned it up, painted. There's a lot more green grass, and the values are up. Property values are up. For the people that still rent there, rents are up. But I don't think gentrification's in total is a bad thing. How gentrification means housing is getting redone. It's getting remodeled. It's getting updated. And that helps the neighborhood. It lowers crime. It helps the schools. Taxes go up. But yes, if you were a renter in the Tower District 2 years ago, you've either had to leave because the supply has gone down, or you're paying more in rent. That's a true statement.
Interesting. Okay. Next question, this idea of, so I saw a Ben Mala video the other day about how he was diversifying his portfolio, right? I think he's starting to go into, I think, he's primarily in the hotel and shopping mall business.
He's been getting smoked recently.
Yeah. But I think now he's going in, I think cannabis, he's looking at like owning cannabis real estate or something like that. But this idea came into my head of sort of, is it better to focus on a particular niche, or is it better to diversify your portfolio to own different kinds of real estate? Because it seems like, Ben Mala sort of focused on hotels and shopping centers, but obviously now that's, hurting.
Yeah, yeah, hurting. That's a
Yeah.
nice word for it.
So it seems like if he diversified more, it probably would have been less risky, but he
You know,
wouldn't.
so in general, I don't believe for most investors, Ben Mall is an exception. He's probably worth hundreds of millions of dollars.
Yeah.
It makes sense. And he has the time and team to do that. Most investors, and I include myself in this, and I have more than most, diversification just adds risk, right? I really
Mm.
truly believe one rental at a time, learning your market takes work, time, and commitment. And I personally, even today, even though I don't have a day job, I don't think I could put as much effort required to learn a second market, learn a second property type. And I think diversification makes you a worse investor because you miss opportunities. Um, let's be clear, right? Diversification can mean lots of things, right? You, I own houses and apartments. For some people, that's diversification. To me, it's just rental units, so it's all the same. To some people, diversification is different parts of town. Well, if that's okay, then I am diversified. But to me, I'm not because I'm in one city. So you got to be careful with that word diversification. I would tell you most investors should not do what Ben Mala is doing because they haven't become good enough at their one focused area.
Hmm. Hmm. Okay. Interesting. Um, so a lot of people are saying that the coronavirus is becoming sort of endemic, meaning like it's going to
Mhm.
be around for a while.
Yeah.
Um, so given that it seems like there's going to be a double dip recession in Q4 and no stimulus in Q1, what's the game plan for 2021 given those two variables? How are you positioning yourself?
Yeah.
Because there's no near term end, it seems like, for COVID.
Yeah. So for me, I think there's a couple of things. First off, I do truly believe that Q4 will be, and it's so hard for me to say this, but I truly believe it. I believe Q4 is going to be the most painful quarter for America in 2020,
Mm,
which is saying something because remember, Q2 was pretty rotten.
yeah, yeah.
So I think Q4 is going to be worse because exactly what you said. Congress let us down. The stimulus is not there. We didn't get the bridge to the vaccine. I do think so. While I think 2020 is going to go down as horrible, and again, I think unemployment goes up. We saw the first tick today at 898. I think record bankruptcies happen in small business. I think we're going to see just mass bankruptcies this calendar year. I actually am pretty encouraged by 2021. I think what we see in 2020, all the stores that say closing, everything must go, all of that. I think we get a stimulus in Q1. I think we get an infrastructure bill in Q2. I think what we start seeing in Q3 is grand opening, coming back, second time through. I think we celebrate in 2021 with capitalism kicking in. I believe that capitalism is an amazing system. I believe we will see the full might and energy pick up in 2021, probably starting in Q2, but becoming visible in Q3. So I'm generally
Mm,
positive about 2021, even though COVID will likely be with us through the year. Uh, I think we, I think capitalism proves its might, and we unemployment comes down, and grand openings go up, and where we have record bankruptcies this year, we have record businesses starting next year. I don't think you can keep the American spirit down forever. There's a saying that I've been quoting a couple of times: "If you're going to go through hell, keep on going." I think Q4 is hell. Um, but I think we keep on going and we get out of it and it starts to feel better in Q1 and so starts to feel better in Q2. So I am, at least as of right now, and this is in the middle of October, I am generally positive on 2021, but I am also more pessimistic about Q4 than most people. I think we haven't seen
mm, mm,
anything yet. I think it's about to get ugly.
mm. Okay. What would be your 2021 game plan then? How would you work on positioning yourself today to kind of
I think
combat
20
that?
yeah, I think 2021 is all about residential properties. I've been very clear here recently that I think commercial, especially urban class A stuff, is in trouble. I've done plenty of videos on that. I've shown you how a $120 million property can be worth 60 million in a heartbeat. We've talked about rents falling 30% in San Francisco, 22% in New York. There's true pain in the urban areas, but that means there's opportunity in the suburbs. I am looking to buy as many residential properties, meaning 1 through 4, single family homes through fourplexes, for the next 2 calendar years, because we'll never see these 30-year mortgages again. We can get fixed rate debt in residential. So if you can buy cash flow rentals today, conservatively financed, I think you are a huge winner 4, 5, 6 years from now. And if your market is like mine, I expect to 1031 out of houses into multifamily in 2024, 2025. Now, that won't be the case in all markets because all markets aren't like California where they go up and down at the same rates. But I am buying 2021 for me is about buying single family homes. I want to buy as many affordable homes because I can cash flow them now. I can hold forever. And in my market, I see 20 to 25% appreciation in the next 18 to 24 months. So, and if I'm wrong, who cares? They cash flow, so I can hold on to them forever.
Hmm. Interesting. Okay. This next question is a little bit more of like an economic theory question in a sense. I know we just talked about capitalism a little bit right now.
Mm-hmm.
There's this idea that the Federal Reserve is kind of what screws everything up, and you know, getting rid of the Fed is really what will bring back capitalism and the free markets, and having the markets control interest rates as opposed to the Federal Reserve. What's your take on that? Should we get rid of the Fed? What's your 2 cents?
Oh, wow, there's a lot in that question. So first and foremost, I think one of the reasons we didn't go into a depression this year, because a depression was on the table. A second iteration of the Great Depression could have happened this year. And it was only through the action of the Fed and the Treasury that we avoided that. They took interest rates down. They interjected trillions of dollars into the bond markets and CMBS and became the lender of last resort to make sure that the system didn't break. That has unintended consequences. We have zombie companies that are operating today that shouldn't be. They have too much debt. They are cash flow negative and they should be dead. They should be bankrupt. I'm here to tell you that I think both statements can be right. The Fed has an outsized role in this. I think the Fed has created bubbles. But, is the opposite something we really want to deal with? Do we really want to have a second Great Depression? Some people say yes. Some people are like, screw it. Asset prices are too high. Let's take them to zero. Let's start this system all over again. I think that's fun in theory to say. I don't think a lot of people would truly enjoy that experience. I think too many people are cavalier in their attitude, and hey, they want to see the stock market. What is it at 25,000 a day? They want to see it at 2,500, not realizing what that would really mean for everyone around them. So I think it's one of those theory things that I can agree with, but also realize that it's probably not practical.
Hmm.
Because I agree with them. I agree that the Fed has the only reason the stock market is near all-time highs is because of the Fed, without question. The only reason housing is going up, the Fed, without question. But I'm not sure I'd want them removed because does Dow 2,500 feel good? Not really. That would kind of suck. So I guess I agree, but I don't see a better option.
Interesting. Okay. And then my last question here, it seems a theme of this channel, right, is long-term investing,
Yep.
right? But is it easy for you? Because a lot of people, it's difficult to get them to think long-term, right? Is it easy for you to think long-term naturally? And then a follow-up to that would be, is it easy to teach? Do you find more often that people are, kind of, don't want to think long-term? And I mean, it's easier to think short-term, right? Thinking long-term is a little bit more painful. Is it easy for you to teach?
So it's really two questions there. First and foremost, no, it didn't come naturally to me. I was naturally a short-term trader. I mean, I've been very clear. I was very successful in the stock market for, I don't know, a year and a half, maybe 2 years, turning $7,000 into almost 200. That was all short-term. I remember one time I was on a trip to Kauai, Hawaii, and the wife, Olivia, and I made a trade. I think I don't know if we bought calls or puts. We bought some options. We went and had breakfast at the hotel. We came back. We made like 14 grand. I'm like, whoa, honey, we're geniuses. We made 14 grand while we were having breakfast, blah, 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 blah. So yeah, I thought in hours or minutes for a long time. And then that didn't work out very well, right? The market turned on me. I didn't see the inflection point. I got caught. I used margin, just all the bad stuff I've highlighted. But really changed for me was real estate. And what really changed with real estate is the debt. 30-year fixed rate debt is amazing because a residential loan can't be called if values go down. You can refi it if rates go down. It's a great flexibility. So what really got me comfortable with long-term investing is mortgage debt. Because now when I make a purchase, or even when I make an offer, my plan is to be able to hold that thing for 30 years because the debt structure allows me to do it. So it was really the flexibility and understanding debt structure that allowed me to think long term. That was that introduction. And then as far as teaching, it's kind of, if the student's ready to learn or ready to hear, they're ready. When I was 29 or 30 and killing it in day trading, I would not have been ready. But as soon as I lost 6 figures and felt like a moron, I was ready. So I think real estate investing, being a landlord, cash flow, you have to be long-term. And what I teach with one rental at a time is that you're making a decision on a cash flow property and your intention should be to hold forever. Now, if the market goes crazy and you want a 1031, so be it. But your intention and acquisition should be able to hold long-term, which is years, if not decades.
So you'd say more often the market seems to reward long-term thinking as opposed to short-term thinking. Is that a fair assessment?
Well, we got to be really careful when you say market, right? So if you're talking stock market, that depends on who you are. Warren Buffett, I would argue, is the best investor of my lifetime. And he treats investing like a punch card, right? You have a punch card, you only can make 10 trades, right? You only can own 10 stocks. Now, clearly he owns more than that, but that's just the mindset. So he's a long-term investor. But there are plenty of very short-term kind of in and out microsecond investors. If you have the horsepower in the machine, it's just don't be confused. Don't call yourself an investor and be a trader. That was my big error. I called myself an investor, but I was day trading. I should have called myself a trader because I think the word investor is best equated with long-term thinking. There's nothing wrong with being a trader, but don't be a trader and call yourself an investor. That is, in my opinion, the reason for mistakes. Because what happened, right? I was trading, then I had a bad trade, and then he said, "Oh, I'll just hold that for a long time." And the trade just got worse and worse and worse and worse and ate me alive. No, if you're a trader, be a trader. Be the best trader you can. If you're going to be an investor, I think that's long term.
Okay, got it. Yeah. Those are all the questions I have for you. I plan on coming back. Hopefully a couple weeks, I'll have some even tougher questions for you.
I like it, Brian. Well, thank you very much for doing this. I have fun. These are great.
Yep.
Thanks.
Yep. Thank you. I have fun too. Appreciate it.